Hello friends and welcome to our new video where you will know about fintech and how does it work, evolution of fintech, development in fintech in India, fintech categories. So let's get started.
As financial services customers order books, food, and travel with a few simple clicks, they now expect no less from their financial services providers. Fintechs have been enabling new technologies for FS customers, and their profound effect on the industry cannot be underestimated. While fintechs continue to lead the way in transforming the customer journey, the revolution that painted them as competitors is fizzling, as these agile startups realize the struggle of competing alone. Both fintechs and traditional firms bring different strengths. Fintechs have achieved their industry foothold by filling gaps left open by bringing innovation to the customer journey. More than 90% of fintechs say that agility and enhanced customer experience are their key competitive advantages, which they say incumbents lack. Incumbents hold customer trust and strong brands, which are the new industry battlegrounds. Traditional firms also bring risk management, regulatory expertise, quick scalability, and financially viable business models, which are elusive to most fintechs. It's becoming obvious that the best way forward is to combine the strengths of fintechs and incumbents through forming symbiotic relationships to meet customers' growing expectations. These collaborations must align with customer goals, build trust, and deliver digital, agile, and efficient processes such as higher personalization, improved convenience, increased speed of service, intuitive interaction, better functionality, and proactive insights. The use of advanced analytics, predictive modeling, and other innovative technologies is also necessary to create offerings that make customers want to return.
The evolution of fintech. Fintech is relentless, shaping the future of financial services, transforming the presentation of financial services and impacting the legacy of financial institutions and fintech startups. 2016 has been a trademark year of financial services industry, thanks to the innovation and fierce idea creation. Business and consumers alike are becoming better educated about poor spending habits. Rather than helping consumers to make poor choices, financial institutions have elected to assist consumers, helping them make more informed decisions about savings, investments, and credit card spendings. Developments in fintech. The rise of financial technology of fintech has been a meteoric. Financial institutions, often from the vanguard of innovation, be it new products or moving into new markets, fintech has arguably democratized financial services, allowing non-traditional firms to enter the space. Emerging markets. The spread of wireless is much faster than in many developed markets, because a lack of fixed communication infrastructure allows these countries to bypass the slow process of improving land-based connectivity. India and China have emerged as leading fintech markets, benefiting from huge online presence and rapidly developing IT industry. Investment. Despite the growth of fintech, investment actually fell in 2016 in some key markets, most notably the US. According to Thomson Reuters, US fintech investment reached $4.27 billion last year, a fall of around 30% from 2015. However, this decline was a result of external factors rather than indication of declining interest. Rise of robots. The range of fintech products and services has expanded rapidly. As such, fintech is likely to move away from its core business areas in the coming years. According to research from McKinsey, the main tent poles of fintech to date, payment application, lending and money transfers, are no longer the core focus. Instead, firms are concentrating on variety of emerging business areas, both within banking and beyond. Areas such as digital lending and cash management, robo-advisory, social integration of trade, among others, are attracting investment and helping to transform the sector. 2020 will be an important year for fintech, particularly consumer focused products. It will be faster, cheaper, and easier for consumers to use financial services due to the explosion of fintech options on the markets. Fintech in India. Fintech in India is especially advantageous since the country boasts of unrivaled youth demographic which is rapidly growing. Furthermore, smartphones penetration is likely to witness an upsurge from 53% in 2014 to 64% by 2020. Relevant stakeholders. Since the fintech ecosystem is based on the principle of integration and collaboration with other agencies, this is where an exchange of ideas and strategies, building of networks, and conversion of opportunities plays a significant role. These are the key stakeholders that define the success of this industry. Startups. Contrary to popular perception, the startup fintech space is not just limited to mobile wallets. Presently, India boasts of over 600 startups in fintech that belong to various segments and the number of predicted to rise, especially with the introduction of initiatives such as focused on accelerator program by local and state government and banks. Universities and research institutions. Academic bodies play a significant role in shaping the mindset of prospective entrepreneurs. Lately, leading institutions in India are playing a proactive role by organizing events and competition as well as offering technical courses. The government, along with regulators such as Reserve Bank of India (RBI) and Securities Exchange Board of India (SEBI), are extending all the support of fintech companies. In order to realize the country's visions to become a cashless economy, Startup India initiative that was launched in 2016. Financial institution. With the rapid emergence of fintech sector, various BFSI are collaborating with fintech startups on a variety of platforms such as wallets and online client acquisition, among others. They are proactively mentoring, supporting, and investing in innovative startups. For example, Bank of India offers a wallet in collaboration with PayNemo that is powered by tech process. Users. The users comprising of consumers in the form of both individuals and organizations have shown impressive receptivity to the transition of India's economic being technology driven. The routine transactions made by cash have been given to cashless transactions and mobile banking. Hope you guys understood all these topics. If you have any query, you can just comment down below and don't forget to subscribe our channel. Thank you.